The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Basil Chapman here on this Monday, the 26th of August, wrapping up the month this week. Going to be really interesting because we've got buy signals in the Dow and all the different indices, but this is what I need to show you. Let me just go to this right here. There we go. Okay, so the Dow is up 190 at 41,366. It's made an all-time high. That means no matter what, this is in a buy mode that should go to at least 4 higher peaks. In the Chapman methodology, it's a very simple technique and concept. Try to identify the lowest low bar, count the higher peaks. It should be alphabetical, A, B, C, D, E, F, G. But at D, the 4th highest peak, other things can happen. If after peak A, it crosses that peak A and starts leg B, remember these are floating letters, they become peaks when in fact there's a reversal down. When the core pattern is upgraded from a buy signal to a buy mode, the implication is in the Chapman wave methodology that there should be at least 4 higher peaks to come, at least. That means peak A is the first peak, B is the second, 1 penny above B starts leg C, pull back 1 penny lower than the previous high, starts a peak C, and then when it turns around, it comes back to the upside by 1 penny, starts leg D. We're only in leg B. The other techniques that I discussed, cup formation, try to identify the number of bars on the left side to the number of bars on the right side so that the price can get back to where it was within that concept of equal number of bars. But sometimes it's very difficult because the low is indicative of a shorter move down and it's going to take longer to go to the upside. So you have to identify a different candle as your plumb line. I did that. I did it together with the Chapman wave inside wedge target dash green on the upside, target resistance line, and it went to exactly to the day right here. There's your dashed line. It broke the inside track repellent zone. This can come, and now we're done with that. It's done its job, so I always like to get rid of anything that's redundant. And what we've got is the price is way, it's at an all-time high. It's done it in exactly the time sequence that I was looking at, but it's only in leg B. That means you have to wait until there's a lower high by 1 penny. So today's high is 41,386.60. If there is no new high above that all day today, that'll be the high. Then if there's a lower high tomorrow by 1 penny, let's just imagine this is the high of the day, 0.60. If it's 0.59, that becomes a peak B. The deeper it goes to the downside, the longer it probably will take to go to leg C. The shorter it is, the easier it is. So there should still be, let's imagine today's leg B, and that tomorrow is peak B. That means Wednesday, leg C, Thursday, peak C, Friday, leg D. You can't get a peak D until the following week, Monday. There's a holiday, so Tuesday. So that's very interesting because, am I looking at it correctly? I think so, yes. And just in terms of the Labor Day weekend, it's always depressing, Labor Day weekend. I wish it was Memorial Day weekend. All right, here we are in leg B. 1 penny above the 41,376.00 round number high from the 18th of July, starts leg C. In the weekly chart, we are now in leg C. Here, let's do the same thing to the weekly chart. That means you couldn't get a peak C until next week. You have to wait until Friday of next week to see if there is a lower high if this week has the high of a leg C. And then you would start a leg D the following week, and then a peak D the week after that. So as it stands right now, all of these are positive on a very short-term basis. As I say, even though the Dow's up 206, I'm anticipating that there's a kind of a market rolling over into different areas. Let's look at the S&P right now. S&P has actually now gone, if I can type that in the right place, instead of on the weekly chart. There it is. So the S&P is now, it was up very nicely. Now it's down 240. What am I doing here? How did that even come into existence? I'll do it again. I'll try it again. Here we go. SPX. Come on. Okay, there it is. So this is actually leg C, a very modest leg C. I don't like that because you went from a very quick B, 1 bar down, that's 1 day, and to a leg C, and it's only a modest leg C at 51.62, way below the all-time high of 56, 69, 67. So we'll say, well, the day's young. We could still get another buying spree to see if there's a higher leg C, but it means that you've got to wait until tomorrow at least before you can get to a peak C. The quicker you get to a peak D, the quicker you start saying, now what happens? Because at D, other things can happen. All right, so with that said, let's go to the QQQ. Very weak, down to 3.16, 476.80. You remember now, what I've been doing for quite some time is using Microsoft as kind of a bellwether. We've been long since October 31st, I think it was, of last year, at 338 round number. And we've ridden all the way up. It went to 468. I said, be careful. I think it's going to be pulling back, and it's going to have a digestive phase as we go to different areas in the market in the next big move to the upside. And that's kind of what we're seeing. And this is kind of telling me about, it isn't telling me about AI, because the AIQ, which is the ETF, the Global X Artificial Intelligence ETF, trading at 35.27, down 25 cents, has had a spectacular leg A from 30.85 on the 5th of August to the most recent high in the 35s. So, and that weekly chart says there's a good chance that it should make a new high, but I don't want to go into the complexity. This is one of the very few charts that we're looking at that has failed at a peak C at an all-time high. Hardly ever does it do that. It's usually a D or higher, but this did fail. There's no other way to count it. And we've gone to a lower low, and now we're having a good rally. But what I'm trying to point out is that even in the artificial intelligence area, this is rotational, and that Microsoft, although it is artificial intelligence as well, is not acting all that well. And that's just telling me that the sector, the XLK, that is the S&P Select Tech Spider Fund, is showing us here that it's kind of difficult. It should be leading to the upside, but it isn't. And I'm even monitoring this carefully because it's saying that because there's a selectivity to this really strong move to the upside, some areas are moving up but not as strongly as the others. It means that you've got to consider that the rotation is continuing. So let me just get to this before we get to the break. I wanted to show you that the IWM, the Russell 2000, has gone very nicely to the upside. It's up $1.77 at 222.18, and that's the rotation we were looking for. Small cap, kind of coming back. Aren't back, but they're kind of coming back. I'll be back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the US futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi, folks. Dow's up 200. S&P is now down 3 1/4. And then Chapman in the Tiger YouTube says, let me just read this. Freight Car America designs and manufactures steel, stainless steel, aluminum, and hybrid steel cars that transport a wide variety of bulk commodities, containerized freight. Okay, thank you. Yeah, but now this is important, but it's a $6.28 stock. It's up 12 cents today. It's had a spectacular move from the twos all the way to today's high of 686. But it is, if this was $150 or $250 stock, I'd say that is really very important. At this point, there could be so many other factors. However, I was looking at NUE. Yeah, I was looking at Nucor Steel Company, one of the major steel companies in the country. Had a very nice bounce. It's up 459 at 152. Up 3%. If I look at the SLX, for subscribers, I always talk about the SLX, but it's been very tough. We haven't been in it for a while, or any of the steel stocks. It's been very tough because the rallies have been quick, sharp, but the declines have also been very quick and very sharp. So with that said, I think that's an A. That's a B. You see, I've seen many of these typing at the same time. A lot of these very quick A, B, C, D, E, even E's in daily charts way under the previous high. And that just says to me, these are, at this point, I have to consider them to be good but counter-trend rallies. And I'm putting this in the category. So, yes, I like it. Thank you for bringing it to my attention. RAIL is the symbol, rail. And it's done really well. I'm not sure if this is not an individual situation, or if this is telling me about the group. But the group has done very nicely over the last week, but not very nicely over the last couple of weeks. So I'm putting that in my pie, and I'm going to say, right, that's just another one of those aspects that I've been talking about, the rotation through different sectors, and even within the sectors, you've got stocks that are doing all different things. All right, so it's very selective at this particular point, and that's what we've tried to be for my newsletter. Yes, we've had a lot of success, and for those of you who sent me notes over the last couple of days saying, "Wow, that great calls." You remember, my philosophy is you got to keep your hands on the wheel, because when you take it off to pat yourself on the back, that's when you hit the tree. So I'm watching this so closely, being as judicious and as careful as possible. We still have our stops in place, and all the things that are working well, have taken little bits off, little tads off, as I say, because you want to at least reward yourself for making good calls. But at the same time, this is not a time that I want to be overly aggressive in any one particular stock or one particular sector. Even though this is where you make the most money, if you're correct, I'm not prepared to take a risk like that for subscribers. So another question came in here. Rail isn't. I don't know why they call themselves Rail. That confused me until I read what you told me about steel. So it's a steel. I mean, look, when Jacob sits in and does a fantastic job of sitting in, Jacob Shoup, he always talks about steel dynamics, rolled steel. Well, this has been making higher highs and higher lows. And it went to a peak F back in earlier this year, up in the 150s, and then it comes tumbling down to the 105, 107 area. Well, it's now at 123.46. It's just done a peak A on the left side there, and is at the moment right at the 200 period moving average in leg B. So yes, these steel stocks are starting to show some resilience, and they're also starting to show some independence to the general market. After all, it's up 2.13%, 2.58 to be exact, at 123.53, as the Dow's starting to pull back a little bit after being a leader, still a leader, but just pulling back. And the S&P had a really nice early overnight and early morning rally, and now it's down 4.5. So yeah, that's what I like to see. Try to pick an area that's doing its own thing, under the radar, I call it. Okay, a couple of things that we're looking at. Okay, now I need to go through this. I might have skipped some things, so let me do it again. So the TLT, in this particular pattern, the rectangle pattern that tries to go from a peak, in this case a peak D, and I should put a down arrow, but I can't, because the 9 is very strong. The price has been above the 9. The MACD is being good. Stochastic's a little bit weak at 70%. On balance, volume is very good. So I'm calling this a rectangle that goes into a lopsided gravy cup formation, goes back towards the previous high, just under, right on, or just above, and that was at 99.94 back in early August. And then we've got to see what happens next. There are a bunch of things, and that means that the yield, which is the TBT, the inversion, is doing exactly the same thing, making this dreaded H pattern kind of a lopsided struggle to get back to the downside, using up a lot of energy, both up and down, but more down. And therefore, the 28.87 is going to be the low that was made back around about August 5th. That's going to be the major support level. If it doesn't hold, yields are going a lot lower. Look at this, TNX.X. That is the 10-year yield, same pattern. Hasn't even taken out the low from last week, but it is a red candle and down 8 cents today, 37.99. That's 3.799. I forgot to put that down arrow there all this time. There, down arrow, peak D. Those Ds are deadly. If they work as a top, it can come down very sharply, and this is what's happening here. Now, what I haven't done today is I haven't looked at the dollar. So the dollar has been in a decided swoon to the downside. It made this cup formation. It took out, let me just put that in there. It took out the left side low in the dollar index was 101.43 the week of the 22nd of December. 101.43. On Friday, we went to 100.60. So we took it out, and we closed at 100. No, we closed at 100.72. So that was below the 172. So 100.62 was the low, so it closed above it. Today, it's gone below it, and so far it's in leg D in the daily chart. Remember, G/C very often, in fact, most of the time, will go to a D. And that's where you can possibly see it, some kind of a bounce. So we're watching the dollar closely. But this is the pattern that I'm looking at. The lowercase h that goes to a lowercase m. What do I mean by that? It means patterns I look at, three particular patterns: straight line up, straight line down, cup formation, arch formation, or a mix of 1 and 2 and 1 and 3. This is a 1 and 3. Comes down sharply, and then it rallies, and then it fails if it takes out that low on the left side. If it holds it or just goes under it and closes above it, there's a chance it could rally, but it's probably not going to rally above the arch high, especially if the arch high was at a peak A or a peak B. And then it can go from an H to a lowercase m with a second arch. Well, what are we doing in the monthly? We've gone down, bounced once, held, and then failed, bounced again, failed, and now there's a much larger one here at a peak A, and now a second one. That's your M pattern. I'll be back in a minute.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archive live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the Opening Call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
This portion of the Tiger Technicians Hour is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Hi, folks. So at 100.91, up 19 ticks. The dollar is really very, very weak. It's got this arch formation. I should have done left side, right side price tie match to that doji candle right there. I didn't, but it would have worked out to about where we were breaking down last week. This is going to be very important. Why? Because look at the EUR. This is the Euro, EUR, USD currency pair. This has gone to a leg D today. I had a 1-to-1 to the upside. It's gone above that. Okay, that's your D right there. I could put a little plus sign above it. I always do that. Leg E in the weekly chart above the January highs. So this is very good action. We haven't yet gone to a leg D in the weekly. The monthly itself has this Chapman Wave inside track repellent zone, and that means that that high that was made back in July of 2023 at 1.127. It's going to, even if we go to that leg D, I think there's going to be a lot of resistance there. And that's probably in another couple of weeks' time where the dollar actually has a bit of a bounce. How much, I don't know, but it's not acting all that well right now. Look at the USD JPY. Usually the dollar and the Japanese yen go in the same direction, but not of the same percentage gains or losses, but they're just directionally. And now look at this. It's gone to a peak C and it's arching over. There's a 144.21, down 0.03, made a peak D in the daily chart right there. That was in July, up at the 160, around about, what was it, 161.95 level. Now it's down at 144. That's a big move down in the yen. And that means the yen has come down. I was talking about this at the time, that as it's going higher, that means that the yen is actually weaker, not stronger. And this is very interesting because now it's pulling back. It's gone into the big rectangle middle range. And the weekly chart is in the sell mode, but the monthly chart is still holding quite well. So I'm going to be watching these very closely. What I did want to do while we're looking at different areas is high-grade copper. High-grade copper is trading up 0.01 at 4.211. It has gone to the 200-period moving average again. It's been there for 1, 2, 3, 4, 5, 6 sessions, and it's just hugging the line. It's just stuck there. I don't know how it's going to break above it. So that's just saying to me, be careful. Now, this is very interesting. The HGX, this is the Philadelphia Housing Sector Index, is almost at a new all-time high. 808.44 was the high. Back, I think it was either the beginning of August or end of July. Yeah, 31st of July. And it's made this pattern that I talk about, the rectangle that becomes a lopsided gravy cup U formation. And it very often can go back to the previous high, either as a peak D, right under, right on, or just above. In this case, it isn't. It's actually in a gray B. No, actually it is a B, but it's underneath the previous high of 808.44. Is at 805.43. It's got a little bit of a way to go. And if it breaks out, I then have to consider, I have to consider that this isn't an F. This is actually a brand new A, and we're going not into leg G, but we're going to leg B. And that says you can go for quite a few more weeks to the upside in the Philadelphia Housing Sector Index, leg E in the monthly chart. This is outstanding action, especially when you think that this is an area that should be having a tough time. It's not. Look, Toll Brothers all-time high right now at 148.03. Lennar is trading right now all-time high at 185.83. And both of these are saying, yep, probably a leg B in the weekly charts. Oh my, that is bullish, isn't it? All right, so in the meantime, I think that the rest period that I thought we'd have today is unfolding. And I used Microsoft, as I don't want to go through that again, as kind of a benchmark for me looking at the tech sector. But if you're looking at Caterpillar, Caterpillar's up strong. Peak A, peak B, leg C, right here. This is good action. This is the rotation I've been talking about, and it's so good to see that the infrastructure that we're looking at, the cyclicals, moving like this. This is good. Okay, the weekly chart is improving. It isn't great, but it is definitely improving. 9-period moving average is strong, but the MACD hasn't yet crossed positive. Stochastic still at 55%. Okay, so now a couple of questions have come in, and I want to look at them. Where on earth did I write it? Yeah, FSLR. I have a tough time with this stock. I followed it for years. We've never, ever owned it. It's trading at 240.44, up 9.37 in leg C, breaking out of the rectangle formation. That is, well, you have to need a little more information, but this is really good. Stochastic 70%, MACD is good. Relative strength is improving a lot. 9 has been positive for quite some time. So this means that First Solar Inc., FSLR, is a symbol, is back in the game. And if it's able, there's a lot of resistance. The weekly chart doesn't show it because it's just broken above. It's in leg B. I still have to call it a gray leg B in the weekly chart. But if you're looking at the daily chart, this particular ugly candle from the 28th of June at 248.73 and a low of 225.12 the same day, I want to see that 248.73 taken out. As soon as it's trading above that level, then this whole rectangle that I've been looking at for some time, the price has said, goodbye, I've got an inverse head and shoulders pattern, and I've broken the neckline. The neckline had a high of, on the 11th of July, of 240.96. And here we are, having gone to 244.21. We're at 240.11. So we're struggling hard, but it's a leg C. I am going to put in an up arrow to say First Solar is now on a daily basis gone to a buy signal upgrade to a buy mode. Well, I should wait for the close. All I'm going to say is that there's a real good chance that by the close it's upgraded to a buy mode. Even though the stochastic's not at 80%, this is very good action. Okay, that was the one. The other one was, wrote it down. Oh, this is what I want you to do. So tomorrow, Wednesday, you've got some old, I can't call them favorites because we've never really been in them, but we've got many old stocks that we looked at. Now, old is not the word. They're young. Some of them are young stocks in the sense that they're not caterpillars or they haven't been around for decades. But stocks that I've been on my list for ages and ages and ages. I wonder if it's actually on my, let me just check it out. It's got it on my streamer list. No, it's not. Okay, so Box. I want to look at Box Inc. And it's just fascinating. I'll be right back. Basil Chapman, Target Technicians Hour. I'll be right back.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust. The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Jeff in the Utah YouTube mentioned ILF. ILF is the iShares Latin America 40 ETF. Very nice action. Look at this. Look at the left side, right? In the middle chart is the weekly. On the right is the monthly. And look at EWZ. EWZ is Brazil. Very similar, very similar. They are coming back a little bit, but they haven't really given big weekly strong buy signals, but they are coming back quite nicely. Okay, so I thought I'd do this just in this particular segment. So look at the IYT. The IYT is the Transportation Index. Made a peak D back in middle of July. It's very important. I don't necessarily follow the old, I'm just typing here, the old Dow theory, whereby you want to see the Dow industrials, because they're not really industrials anymore, at all-time highs with the transportation index. You can't even consider iShares transports in a sense to be just purely industrials. They are all over the show. Yeah, they're cyclical, but you've got, the rails go throughout the year. They're not necessarily cyclical in that sense. So they're more secular. But in the meantime, what you've done is you've gone down very sharply in the transportation index from the last high that was made back in March of this year in the 71 area. And then it came down very sharply to the 60s. And at 66, just the most recent buy signal, this is doing very nicely. Stochastics flat at 92%. And that just confirms that, yes, even within areas of a particular sector, you've got very strong moves to the upside. But if you're looking at this and saying, well, the Dow just made an all-time high, where's the industry? Because the Dow aren't the industrials anymore. It is just the Dow 30. It's a very mixed, very well balanced U.S. economy it's almost like I was to say Jimmy Buffett, but it's not. It is Buffett's Berkshire Hathaway types index or stock. Okay, so in this case, we're at 66. We're only 6 points away from the all-time high and rallying, and that's a good sign. So what I wanted to say, if you put it together with JETS, and you'll see what I'm saying about the rotational aspect. Look at this, JETS. That's the U.S. Airlines. Basically, that's the U.S. Airlines ETF, the Global JETS ETF. This is allows the dreaded H. Lowercase h, it held the left side. Good question. I think it might have tagged it. The low was back in 2022. That was in October. It went to 1477, and the last two lows were at 1469 and 1470. So we took it out. So this has to be a brand new start. Look at this. That has to be an F trough, and this has to be a brand new buy mode. No, it hasn't even done that in the monthly chart. This is just a buy signal. Leg A went to a peak A, and it's only a buy signal. There's no buy mode confirmation yet. Stochastics weak. MACD is good. 9-period moving average is so close to turning pink negative again, but it isn't, and that's a good sign. But look at this weekly chart. Yeah, this is going to be very interesting. So the transports, got to watch them closely. So the question came in. What made it look like this could be a rally that could take the indices up to all-time highs? Well, that was a very difficult question, because if you look at the Dow, this move down was very sharp from the 41,376 high of the 18th of July, and then it rallied nicely into the end of July and fell just under that, and then it went more than a 1-to-1 to the downside from that cup formation. Well, one of the things I was looking at is that the weekly chart, 9-period moving average, held beautifully. So I'm just going to go here because a lot of questions came in and I needed to answer them. A lot of it was done just purely on Chapman wave notation. I want to go to this chart right here. Let me just move that away. There we go. Move this across. So we're looking at the Dow. This is a daily chart, but if you go to the weekly chart, this is the 9-period moving average, green when it's above the 14-period moving average, black 14-period moving average. It goes pink when it goes below it. And if you're looking at the weekly chart, have a look at this. One of the reasons why it was so positive is that on all those dips, the 9-period moving average held above the 14. That is just a really good sign. Okay? I wanted to show you that. If I look at the S&P, on this one, I'm talking about the pullback here. That pullback right there. You could even go to this pullback. The 9-period moving as held on a weekly basis extremely well. Look at the QQQ. Again, very sharp pullback, and then it rallied, and the green 9-period moving average on the weekly chart is still positive. But wait a minute. Look at the IWM. That has been the weakest of the indices, one of the weak indices. And look what happened. Every pullback, the 9-period moving average is held above the 14. So using this one tool, let me do this because it's kind of fun. And we're just waiting for a peak D in the market. So we have to do nothing. We're in buy modes on just about everything that we have. And we're just waiting. So is this the one that I could look at? Where's the one that just changes color? I think it's this one here. Let's just see if we can do that. Yeah, look at this. So this is, let me go to it's just easier to see. Look at this, INDU. This is just one indicator. Goes green when it crosses positive. It goes pink when it crosses negative. Look at that. Let's just go back to the weekly charts. There's the weekly chart. Look how nicely it's held. Look at the SMHs. And they've been kind of weak in the last couple of days. Look at this. Still green, but starting to really test the metal of this green line, because you can see the green line itself is arching over. So I'm going to be watching this very closely in the month of September. Look at the XLK. That is the S&P Select. This is a weekly chart, remember. This is the Hello, anybody home? There. This is the XLK. This is a select tech spider fund. And it's still holding very nicely. So I'm using this. And if you look at the TLT, it went green and has been green. And yes, it's bumping to left side, a cup formation with a left side high that it needs to pierce. But so far, the green is very good. Look at the TBT. That's the opposite. Pink, and it's heading down. It looks like it's heading down. But as soon as price goes above the pink 9-period moving average, that's going to be a problem. Did I just hear a break coming? Yep, a break coming.
The consistency you're looking for is closer than you think. 1 or 2 adjustments are usually all you need to change your equity curve from red to green and keep it there. Come join Larry Pesavento live to learn what separates the winners from the losers. Join Larry Pesavento on the 2nd and 4th Friday of every month for 3 hours of live trading from 9 a.m. to 12 p.m. Eastern Time, where Larry will show you the market setting up and, most important of all, the state of mind of a winning trader. By watching Larry trade, you'll learn the Fibonacci levels, you'll learn how to apply A to B to C to D trading patterns, you'll learn trade management, pattern recognition, and much more. Join Larry August 9th and 23rd for more live trading action. For this month only, use code LarryAug24 at checkout to save $50 off your first month as a subscriber to Live Trading Fridays for his live trading sessions, where you'll sit right beside him as he trades the market live. For this month only, enter code LarryAug24 and save $50 off your first month. For all the information and to reserve your spot today, visit the front page of TFNN.com.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Hi, folks. So what I'm saying is that this is a very mixed market right now. We have some selectivity. It's broadening out in some areas. As I say, the IWM seems to be doing quite nicely. Dow's now only up 135 at 41,310, but it's made an all-time high. This is a leg C in the weekly chart. So let me do this real quickly. So we've got Apple. It's gone to a leg A, peak B, counter trend rally made that peak D in the weekly chart, but the 9 is still very strong over the 14 in the weekly chart. Look at Goog. Google is trading GOOG. This is Google, not GOOGL, but this Google struggling. The weekly chart has just gone pink. It went pink last week. That's not a good sign. It means it's struggling a little bit. If you look at Amazon, did I just do Amazon? Yeah, Amazon. A couple of weeks ago, the 9-period moving average went pink in the weekly chart. Kind of struggling, right? Look at Netflix. Netflix was doing very nicely. Made an all-time high, and that's acting very well. Weekly chart strong, what it is. I'm calling it a leg D. So you can just go through these, but then you go to Home Depot. Wow, look at that. Very nice counter trend rally. So what I'm saying is this is very selective. I believe we're going to go to higher highs, certainly this week. I'm waiting for that peak D in the daily chart to say, okay, do we start to look at the downside? But so far, everything looks good. We're still on leg B. That's amazing. I'll be back tomorrow. Check out my opening call, my daily newsletter. Stay tuned for Steve and all the great programming coming up today here at TFNN.